Grads of FinLearn Academy and fellow traders, let's see what lies ahead. So, market is still stuck in a trading band, which means it is trading in the context of last high, which was around 18,300, and the last low, which was around 16,800. So, we are trading sideways in this band, and within this band, we are seeing some high intra-week volatility. So, going forward, will the choppiness end? The answer is no, it will continue till we don't break this consolidation band. Now, having seen the consolidation, let's see the strength and the weakness. The first we do is by plotting the 20-day moving average. I'll go to average and plot my 20 DMA. 20 DMA gives you my indication whether the short term trend is up or down. Let's see where market is trading above or below the 20 DMA. Prices are trading below the 20 DMA. See, all the bounce in the market, prices fail to sustain to close above the 20 DMA. And 20 till 20 DMA is not crossed on a closing basis. The short term bias will continue to remain negative. Again, you had a bounce last week. Exactly, the rally fizzled out at around the 20 DMA. So now you have a reference point on basis of which you can say that we can expect an upswing, which is break above the 20 DMA. Till that is not happening, we are likely to continue in a choppy market with downsides. And when we talk of downside, let us plot the 50 DMA. Market has closed below the 50 also. So we can say that the short to medium term trend for the market is down, since it's below both 10 and 20 and 50. Till 20 is not crossed, rallies are to be sold into rather than bought into. A close above the 20 DMA will give us an indication that we are heading higher towards the last high. Right now, all the indications which we have is we are heading towards the last low. Having said that, now let's plot the long-term average, which is 200-day moving average. And the 200-day moving average is around 16,800 or around the last low. So prices are likely to go and test the support level around the 200 DMA, and let us see whether it's breaking or not. So going forward next week, at least for the initial start of the week, the bias is negative, since prices are on a closing basis below the 20-day, which is the short term, and 50-day moving average, which is the medium term. Prices are closed below both. So the choppiness in this band is likely to continue, and till it's not crossing above 20 on a closing basis, there is all likelihood that we are heading towards the 200 DMA, and let's see whether 200-day DMA holds or not, or it breaks. So till we are not crossing this high, the possibility of this low being breached is high. So that's where the 200 DMA and the last low is coming. So the market's likely to remain choppy, and the bias going forward next week is negative. I think we should go and test the 200 DMA, where the test of conviction of bulls will come into picture. Till it's not happening, the choppiness or the erratic movement which you see over the intra week will continue. So you don't have a trending market. Why we are saying you don't have a trending market, which we are trading between the last high and the low. You have a sideways trading choppy market. Pick up the days where you are going to go long. Pick up the days where you are going to go short at what levels. And it's a pure trading market within the sideways trading band between the last high and the last low. Now let's go to Bank Nifty. Again, we'll do the standard check. First, we'll plot the 20-day moving average. Bank Nifty is maintaining above the 20. But again, having said that, it has gone sideways. Let us plot the 50. 50 is way down here from where the last this rally happened. Right? So Bank Nifty also, and if you see on the weekly time frame chart, it is facing resistance from here. So upside is capped in this market. That's what all the price charts are showing. The momentum is changing to on the downside. So Bank Nifty likely to remain in this trading band of 39,000 on the upside till this average, which is 50-day moving average, which is 37,000. So it's 1500 points band on the Bank Nifty. Until this high is not taken out, we'll maintain a negative bias also on the Bank Nifty. So it's a sell on rise markets. Let's see whether the dips around 50 holds or not, or we'll go and check the 200-day moving average. The 200-day and the 50 is around here. So Bank Nifty on declines had some cushion in the short term between 36,500 to 37,000. So it's likely to trade within this band, and we will maintain negative bias till it's not breaking this high. So going forward, our markets are at resistance. The short term and the medium term averages on the Nifty, we are closing below it. The choppiness is likely to continue, uh, and we'll maintain the bias as negative till we don't close above 20 on Nifty, and on Bank Nifty till we are not taking out this high. Will The trade will be sell on rise with a stop around the higher levels. So that's for the weekly update, friends.